What is going on, guys? Today we're talking about investing your money and what you should do to start investing your first $1,000. Chances are pretty good that this is going to be a long video, but if you stay tuned until the very end, I'm going to share with you one of my favorite ways to invest money. What's going on, guys? I'm Bryce with Sane Sense, where we talk about everything from personal finance to real estate investing. As usual, I try and put out new videos every single week, so if you really like what you see, be sure to hit that subscribe button down below and of course hit that like button as well. It really helps us out with the YouTube algorithm, so we appreciate when you do that. And before we get started, be sure to go ahead and comment down below your favorite way to invest money and where you personally would put $1,000. So getting right into it, we all have to start investing somewhere. I remember back when I was in college, I had my first $1,000 and I was ready to invest money and I was pumped. Now, the problem though was that I was in college. I was riddled with debt. I was mostly living paycheck to paycheck. So I thought I was ready to invest, but in actuality, I should have done things a little bit different. What it really came down to is I was just really excited to start growing my money. If I could go back in time, this is the information that I would share with my college self, or really anybody who wants to get started with investing. So starting off, I want to share with you guys my personal approach to investing. The first tip that I would share with somebody who wants to get started in investing is be consistent and have self-control. The thing is, this is pretty much applicable to anything in life and not just investing. If you want to get in shape, you have to have self-control and you have to go to the gym and you have to eat right. If you want to excel in your career, you have to show up for work and you have to work hard. If you want to learn a new language, you have to be consistent, you have to have self-control and practice every single day. Investing is very much the same way. If you want to be successful, if you want to be wealthy, you have to have self-control and not buy stuff that you don't need. Instead, take that money and throw it in an investment account and watch it grow over time. Another thing I would mention is that investing is a long-term approach. This is by no means a get-rich-quick scheme. When you only have a little bit of money to invest, such as $1,000, you need something that's going to be really inexpensive, doesn't have crazy expense ratios, and also isn't going to be a huge time commitment for you. You want to find something that has really low fees. For example, if you have $1,000 and the fees are $5 on a stock trade, $5 for the buy and $5 for the sell, that's $10 that you just lost right there. So out of your $1,000, that's 1%. Fees can cut into your profit significantly, so try and find something that has little or no expense ratio. At this stage in your investment career, you really want something that you can just set and forget about. With as little as $1,000, your time is better spent accumulating more assets to invest than managing the assets that you will be investing. Now, as you guys already know, I love real estate investing and that's my preferred investment vehicle, but that's not going to be mentioned here today because that's really not a set and forget type of investment. Later on down the road, I would absolutely recommend that, but if you're just starting out with $1,000, I have a few different tips. Now, before we get started with investing, there's a few things that we need to do first. We really need to get our houses in order before we start investing. Like I mentioned earlier, when I was in college, I was so excited to start investing because I thought I was ready, but it turns out that I was so far off from that. At a bare minimum, before you even think about investing money, you need to make sure that you have these 4 things done first. 1 is you need to make sure that you have a fully funded emergency fund. 2, you need to make sure that you have any high interest debt paid off. So that's anything in the 5 to 6% or higher range. That could be student loans, could be credit cards, could be really anything above 5% is considered high interest debt. You need to make sure you're contributing to either a Roth IRA, a 401k, or both, particularly a 401k with a match. And if you know that you have any other short-term savings goals coming up in the future, for example, a down payment on a house or a car, or you have a tuition payment coming up, you should definitely take care of those things first before you even think about investing. Number 1 and number 2 are very much defensive moves. Having an emergency fund is a great safety net, and paying off any high interest debt, that's the most risk-free return you're ever gonna find. Number 3 and number 4, on the other hand, are more offensive moves. Both a Roth IRA and a 401k offer a lot of advantages that you're not gonna find in other taxable investments. If you can make tax-free returns, you should definitely do that first. So use both of them if you can. And lastly, number 4, make sure that you have any other savings goals out of the way. Like I said before, investing is a long-term goal. It's a long-term strategy. So if you have a big expense coming up in the next 2 to 3 years, then investing is not for you. If you can afford to leave your money invested for 5 years or longer, then you shouldn't be investing at all. And especially if you're going to need that money in the next 2 to 3 years, it shouldn't be invested in anything risky whatsoever. Okay, so now that we have your house in order, let's go over a couple of my guiding principles. When you're getting started in investing, you want to make sure to keep your costs low. I know we already mentioned this, but I think it's worth mentioning a second time because it can cut into your returns significantly. Fees will absolutely eat you alive, and so we need to make sure that you keep those as low as possible. There's a lot of brokers that'll charge you $5 or more per trade, and so if we can eliminate that altogether, that's the best route to go. Within the last few years, there's a lot of different investing apps that have come out, and one in particular that I love is called Robinhood. If you haven't heard of it before, it's a stock trading platform where you can invest money completely free. Every single stock that you buy or sell, there's no transaction fees. I'm going to leave a link down below for Robinhood. If you sign up with that link, you and I both will get a free stock, so it's worth checking out. Another thing you want to remember is that we're not gambling here. All of these investments should be, for the most part, risk-free. We want long-term, non-risky investments. If you're looking to quickly double your money, then you need to be going to Vegas because right here is not the place to do it. The last thing you need to remember is that time is your greatest asset, even more so than the money that you invest. Get started early and be consistent. Okay, enough talking. I realize you want to just get to the point. You're saying, Bryce, where should I invest my money? I've got this chunk of change, I'm ready to go, where should I put it? Out of all of the different investment vehicles that are out there, the simplest, easiest, and probably what I recommend to most people is an S&P 500 index fund. I'm sure you've heard that term thrown around all over the place, but an index fund, if you're not sure what that is, all it is just a metric that tracks the performance and tries to get you about the same returns as the rest of the market. So the S&P 500 index, for example, stands for the Standard & Poor's 500, which means it is tracking the top 500 companies in the US stock market. Whenever you purchase this index fund, you are essentially purchasing 500 companies. The reason that this is so great is it limits your exposure because you're going to have some companies that go up, you're going to have some companies that go down, but for the most part, overall, you're going to be going up over time. Whatever the stock market returns, you're going to return. The S&P 500 is a great index fund that over time generally returns anywhere between 8 and 9%. This is very much a set and forget strategy, which is why I recommend it to so many people. Unless you're really passionate about finance and investing, most likely you're just not going to take the time to constantly check your investments and change your allocation and change this and change that. You want to put your money away and then completely forget about it. This index fund can be purchased on Robinhood, and I'm going to show you how to do that right now. I'm going to assume that you've already signed up for the app. Let's see if I can do this facing this way. So the first thing you're going to do is you're going to push the search button down at the bottom of the app. And then you're either going to search for SPY or you're going to search for VOO. You may ask what the difference is between SPY and VOO. Really, there's not a big difference. So pick one and you're going to be safe with either option. I'm going to click on VOO, and if you look at that, it's going to bring up the Vanguard S&P 500 Index Fund. As you can see, the current price is $267.98. And if you click the little 3-month button right down there, you'll see that over the last 3 months, there's been a steady increase. Now, this is by no means a guarantee. I mean, if we look at the 1-year mark, take a look at this. It was doing really well, and then there was a massive dip. But this is great because look at the far right and you'll see that we're exactly where we were at. That's why long-term investing is such a big deal, because there's going to be dips in the market no matter what. And if you have a long-term stance, it doesn't matter. The great thing about Robinhood too is you can set up automatic deposits. So every week, every month, every other month, whatever you want to do, it'll automatically pull money out of your checking account and invest it in the different stocks that you tell it to. I'd highly recommend doing that because if you just set your investing on autopilot, you don't have to think about it. There's no emotion involved. It just invests for you, and you'll be amazed at how quickly your money will accumulate. Now, when I say to throw money in an index fund and not look at it for 10 or 15 years or longer, I'm serious. I'm not joking. I know it can be tempting to, take a look at how your investments are doing every single day or every week or every month, whatever it may be. But when you start to do that, you get your emotions involved in it, and investing is not emotional whatsoever. When you say that you have a good feeling about a stock, that stock doesn't have a good feeling about you. It doesn't care. Investing is very much all about the numbers. It's a long-term approach, and you need to have the patience and the self-control to not look at it. So that's it. Yeah, that's it. If you look around for other ways to invest $1,000, you're gonna find a ton of different options. In fact, I'll list a bunch for you, and I've got a long list. So you can invest in CDs, which are certificate of deposits. You can invest in money market accounts, robo-investors, hard money lenders, online savings accounts, municipal bonds, treasury bonds, peer-to-peer lending, tax liens, Forex trading. You can invest in cryptocurrency. You can start a business. You can invest in my personal favorite, which is real estate. There are so many different ways to invest and throw your money somewhere. But with any of these, there's a significant sink of time that's required, or if there's not a lot of time, there's a lot of knowledge that's required with a lot of these, and we just don't want to go there. When you're starting small, when you're starting new, you want to take your $1,000, put it somewhere, let it grow, and that's really the easiest way to go about it. So in conclusion, just to wrap all this up, just make sure that you make investing simple. It is not as complicated as a lot of people make it out to be. I've mentioned it multiple times in this video. I've mentioned it many times in other videos, but I love real estate investing. But there's a specific reason that I don't suggest that for everybody. For one thing, not everybody wants to be a landlord. And now I'm not saying that if you want to get into real estate investing, that the only way to make money from it is by being a landlord. No, there are lots of other ways to do that. But you have to have a passion for it. And I really just genuinely enjoy real estate. I like the returns that come from it, obviously, but I don't know, there's something about having this house, having something tangible that I just really enjoy and I really like. But I'm not so naive as to think that it's meant for everybody. There's a significant amount of time that's involved. There's a lot of knowledge involved. There's a lot of risk that's involved. And just for a first timer, I don't recommend it. Now, having said that, I suggest take the easy approach, stash your money away for 20, 30 years, look at how much your money has grown, and you haven't had to touch it, really. When you come back 30 years from now, let me know how you do, and you can thank me. Anyway, that is it for this video, guys. Thank you so much for watching. If you learned a thing or two, be sure to comment down below what you learned. I love to hear from you guys. We really like to interact with you guys. And as always, my typical spiel is if you like what you see, be sure to hit that subscribe button down below. And as always, if you like what you see, be sure to hit that like button as well for me because it really helps us out with the YouTube algorithm. That's it for this video, guys, and we will see you next week. Thanks for watching.